Yeah, good afternoon to all. Yes, calculation of ratio, that is ratio classified into four categories, broadly classified into four category on the base of the nature, purpose of management. One is liquidity ratios. Some ratios are the liquidity ratio, current ratio, some ratios are there. Then capital structure ratios or long-term solvency ratios. Then thirdly, performance ratios or activity ratios, and lastly profitability ratio. These are the broad classification on the basis of the nature, purpose or management. These about the ratios. The next one, fund flow statement. This is also one of the important techniques of analysis of financial statement. Here, the fund flow statement means the term fund flow refers to changes in working capital between two periods. It may be 17 or 18. Fund flow is nothing but changes in working capital between the two periods, 2 years, 1 year, 17 year, it may be 17 years or 18 years, or it may be say, 18 years or 19, two periods, comparison between the two periods, accounting period, two accounting period, that is, we in simple word, we call it as a fund flow statement. That is then procedure for preparation of fund flow statement. Therefore, there are four steps are there while preparing fund flow statement. That is preparation of schedule of change in working capital. That is the first procedure, first step. And second step is preparation of accounts of long-term liability. That is capital liability side, investment and fixed assets, asset side. Accounts. Here first, we need to prepare a schedule of change in working capital. Then open an account of all the liabilities and fixed assets, all the fixed term, long-term liabilities and fixed assets. We need to open an account. Then third step, preparation of adjusted P&L account. We need to open and prepare an adjusted P&L account, and lastly preparation of fund flow statement. These the four steps are most important for to solve the problem or to understand the fund flow statement. Yes, this is the pro forma, that is format of schedule of format. This format is available in our website, sorry, in our study material. This format is available in our study material, because here I already mentioned many a times. Proformas are important, most important, that is a guide to prepare any or to solve or prepare any problems in the accounting. Therefore, proforma, this is also one of the proforma. You practice that proforma where that current assets, that is where that current liabilities appear and where that current assets appear, and what should be the, that is treatment, that we need to understand that. Therefore, here this is the format of proforma. See that proforma card as per the proforma of schedule of change in working capital. Here, particulars, the next column year in the sense that it may be 2017 or 18, two periods information. This 17 or 18, increase or decrease. If it is increase, mention here. If it is decrease, that is amount, you mention that amount. This is the proforma. Go through your study material. There we provided our study that is pro forma. Here current assets, what are all the current assets? It may be in general. Current assets are sundry debtors, closing stock, cash in hand, cash at bank, bills payable, receivable, then prepaid expenses. These are all the probable items that is coming under current assets. Then total of current assets, then less current liabilities. Current liability first, current assets, then next current liabilities. That's current liabilities also, it may be sundry creditors, bills payable, bank overdraft, provision for taxation, outstanding expense. These are all the probable items in current assets. One is current assets, another one is current liability. Then total that current assets. Yes, the next step is total of liabilities B, because here total of liability, the current assets total, then here total of current liabilities, then current assets minus current liability is equal to working capital, A minus B. This is B. Current liability is B. Current liability, current assets is A. Working capital, current working capital schedule of changes in with the help of the schedule of changes in working capital, we can find that the current assets minus current liability is equal to net working capital. We can find out that current assets minus current liability is equal to, that is working capital. Net working capital, we can find out that is increase or decrease in working capital. It may be increase in working capital or it may be decrease in working capital. That is the pro forma of schedule of change in working capital. The second step, that is the first step. The second step is pro forma or format of profit and loss adjusted account. What are all the probable items that is appear in the profit and loss appropriate account? Second step. This is the second step. To propose dividend, interim dividend, provision for taxation, transfer reserve fund, return of goodwill, discount of shares, return of preliminary expenses, underwriting commission. These are all the probable items of debit side of profit and loss adjusted account. Then come to the credit side, that is balance brought down profit and loss adjusted account, that is provided in the problem. Balance brought down, that is rupees. Then difference we call it as and balance carried down, balance brought down, and left hand side, that is opening balance and closing balances. Balance brought down, opening balance, balance carried down, that is closing balance. Is the difference we call it as an, that is fund from operation. If it is debit side is more, that is fund from operation. If it is credit side is more, fund loss from operation. This is the format of, that is profit and loss adjusted account. Yes, the next step, that is open an account. After that, open an account and cash flow statement, fund flow statement. 4 steps are there. First one is schedule of change in working capital. Then second one is profit and loss adjusted account. Then third one, open an account. All the fixed assets and fixed liability, we need to open an account, because here in the previous schedule of change, current assets and current liabilities are considered here. Therefore, we need to open an account of fixed assets and fixed liability. This is the format of that. Then open an account, there is no such format. Open an account, then balance brought down, is there any adjustment? Then we go for that balancing figure. That balancing figure, we call it as that is source of fund, application of fund, or whatever may be the transaction that is related to that. Yes. Then pro forma of fund flow statement is also that is available in our study material. If it's possible, I will exhibit that, because in this slide that is not exhibited in this PPT PowerPoint presentation. Therefore, fund flow statement from sources and applications. Sources means that is sources of fund. So application of fund. Sources means that fund comes into the organization. Application of fund goes out from the organization. That is the meaning of that. This is about the fund flow statement. Next, I will explain that. I will move on to the problem for this fund flow statement. Before that, I will explain that in cash flow explain that cash flow statement. After that explanation of cash flow statement, we will move on to problems on fund flow statement and problems on cash flow statement. Okay, cash flow statement. Cash flow statement, it is a statement cash flow from operations. That is under that A, flow of cash is known as source of cash. Outflow, inflow and outflow of cash. Inflow, cash comes into the organization or business organization. Outflow, cash, application and uses of cash. That is outflow. Cash goes out from the organization. Yes. Then computation of cash flow statement as per AS3, accounting standard 3. AS3. Here also there are 3 steps are there. First step is cash flow from operating activity. Then second step is cash flow from investing activity. The third step is cash flow from financing financial or financing activity. Operating activity first, then secondly investing activity, financing. There are three categories of that is cash flow statement as per AS3 accounting standard 3. That is one is operating activity, another one is investing activity, then last one is financing activity. Yes, this is the procedure for that, steps for that, and broad meaning of that cash flow statement. Then here, classification of business activity, inflow and outflow of cash, operating activity. That is, what are all the operating activity? In operating, three categories: operating, investing, and financing. Three category. Under that first one, operating activity, cash inflows. It may be in the form of cash sales, received from debtors, commission and fees, then royalty. These are all the cash inflows from operating activity. Cash flow from outflows, cash outflows from operating activities, cash purchases, cash purchases of raw materials or any goods, cash purchases. Then payment to creditors, cash operating expenses, payment to wages, income tax, manufacturing expenses. These are the cash outflows from operating activity. The effect of the transaction is net income. The next one is investing activity, operating activity, investing activity, operation, operating activity, investing activity, and financing activity. Yes, what is that investing activity? What are all the inflow, cash inflows from investing activity? Sale of fixed assets, cash comes into the organization. Sale of investments, cash comes into the organization. Interest received, cash comes into the organization. Dividend received, cash comes into the organization. Working capital recovery, that is also cash comes into the organization. That is investing activity. Then cash outflows. Cash outflows, that is purchase of fixed assets, cash goes out from the organization. Purchase of investment, cash goes out from the organization. Working capital is also, that is day-to-day expenses. That is also cash goes out from the organizations. Then financing activity, operating, investing, and financing activity. Yes, what are all the financing activities? Cash inflows, issue of shares in cash, cash comes into the organization, issue of debentures in cash, that is also comes into the organization. Proceeds from long-term borrowings. This also cash inflow from financing activity. Cash outflows, payment of loan, cash goes out from the organization. Redemption of shares, cash goes out from the organizations. Redemption of preference shares, then payment of dividends, interest paid, then repayment of finance or lease liability. Cash outflows from the organization. This is three: investing, operating, investing, and financing activity. This is the most important concepts of most important, that is aspects of cash flow statement and methods of cash flow statement. Then preparing the cash statement of cash flows, that is indirect and direct. Two methods are there: one is indirect method and direct method. Here the companies favor the indirect method for two reasons: because more than 98.8% that is using indirect method. The two reasons they are adopted for indirect method: it is easier and less costly to prepare. That is most important. If you go for any activity in the organization or a company or a business, that should be less cost, easier and less cost. That is most important concept. Therefore, they all the business organizations switch over to that is indirect method. Then it focuses on difference between net income and net cash flows from operating activity. Therefore, They are majority of them. They are adapted. They are using that indirect method. Then, before going to that problems of fund flow and cash flow statement, the difference between fund flow and cash flow statements are, what are the difference we will find in the cash flow statement if we compare with fund flow statement. The first difference is it is based on the working capital concept of fund. It is based on narrow concept of fund, that is cash. Working capital means schedule of change in working capital. Current assets means current liability. That is the meaning of that cash flow. But cash flow statement is narrow concept of fund, that is cash, purely cash. That is cash flow statement. The second difference, it indicates the causes for changes in working capital. Causes. What is the effect of changes in working capital? It indicates that. It shows the cause of changes in cash position of the organization. Fund position, cash position. That is the second difference. Third one, it is suitable for long range planning. Long range planning. It is fund flow statement is easier and more suitable. Then third one of cash flow statement, difference of cash flow statement, it is suitable for short range planning. Short range cash flow management, short flow planning. Then in case of fund flow statement, that is long run planning. The next one is fourth difference. There are no opening and closing balances of cash and bank balances in fund flow statement, but in case of cash flow statement, we start with opening cash and bank balances and close with the closing and cash and bank balances. That is the major difference of that. It opens with no such opening balance or closing balances of funds in fund flow statement, but in case of cash flow statement, it opens with opening balance, ends with closing balance. That is the major difference. Then, fifth difference, the schedule of change in working capital is prepared to find out the increase or decrease in working capital. Therefore, we go for that increase or decrease. Why we are going for change? That is prepare the schedule of change in working capital, increase or decrease in working capital, that is working capital. But in case of cash flow statement, the preparation of schedule of change in working capital is not necessary in fund flow statement. Then sixth difference, it is based on accrual basis of the accounting, accrual basis earned but not received. That is also we considered in accounting is also accrual basis concept. One of the important accounting concept, accrual basis, because profit earned or money earned but not received at present, we are not received that. Maybe next year or maybe next day or any time you can access that amount. In that context, that is, it is based on accrual basis of accounting, because in case of cash flow statement, it is based on cash basis of accounting. The word, the cash flow statement, it is clearly mentioned that that is cash flow statement, that is based purely on cash basis, based on the cash basis of accounting. The last difference, that the inflow of funds may not necessarily result in cash flow. Cash cash inflows of results in inflow of cash, but in case of the inflow of cash results in inflow of funds. That is the major differences of that. Yes, this is the format of cash flow statement as per the AS3. Under that, three categories are there. Cash flow from operating activity, I explained that. Cash flow from investing activity, explained that. Then cash flow from financing activity, I explained that. What are all the probable items that is appear in that format of cash flow statement? One is after that. Cash flow from operating activity, outer column, the amount outer column. Net profit before tax, inner column. Add non-cash and non-operating expenses, less non-cash and non-operating incomes. Add that. Operating profit before changes working capital. Here, how to find out that operating profit before changes changes in working capital, add decrease in current assets and increase in liability, add less increase in current assets and decrease in current liability. And net cash flows from operating, the fire difference we will call it as the net cash flows from operating activity. This is about cash flow from operating activity. Then second one, cash flow from investing activity. This is the second category. Here, purchase of fixed assets, inner column, sale of fixed assets, purchase of investment, sale of investment, interest received, dividend received, then total, the net cash flow from investing activity. This is about the cash flow from investing activity. The third one, cash flow from financing activity. Cash flow from financing activity, the items appear in that probable items it appear in that cash flow from financing activity. Issue of shares, cash comes into the organization. Issue of debentures, cash comes in. Repayment of loan, repayment of loan, term loan comes into the organization. That add closing cash balances. Closing cash balances add less operating cash balances, cash flow from, that is the total available information we call it as a cash flow from overall activity. This is about the pro forma of cash flow statement. All the pro formas that is available in our study material, you go through that. Okay, shall we move on to that is problems on fund flow statement and problems on cash flow statement. Yes, the problem on fund flow statement. From the following balance sheet of XYZ Limited, prepare fund flow statement. Here, because here equity share capital, preference share capital, general reserve, profit and loss account, proposed dividend, creditors, bills payable, provision for taxation. These are all the information provided in the problem, in examination and textbooks and study material. Then come to the asset side, that is goodwill, building, plant, debtors, stock, bills receivable, then cash, bank. These are all the information available in this problem. With the help of that, additional information is also provided. These are in balance sheet information. With the help of that, we need to prepare fund flow statement and cash flow fund flow statement. Yes, additional information. And that first one, depreciation of rupees 10,000 and 20,000 has been charged to plant and building respectively in 2000. That is 13. Second one, second additional information or adjustment. An interim dividend rupees 20,000 has been paid in 2013. Third one, income tax rupees 35,000 was paid during the year 2013. These are all the three additional information available in that problem. Yes, here within bracket I am mentioning that within bracket where it appears here, fund flow statement or schedule of change in working capital or open an account. Two effects, all the that is transactions, all the entries, all the informations, that is twofold effects from liability side, asset side, and additional information. Two effects. See in the equity share capital fund flows that is appear in fund flow statement, then FL is nothing but fund flow statement. Because for your easy understanding, I mentioned that FL means fund flow statement. Fund flow statement. Fund flow. Then here open an account. OAC means open account. Open account. Two effect, that is first fund flow we need to consider in fund flow, equity share capital and open an account. Then preference share capital, that is also fund flow and open an account. Then general reserve, fund flow, open an account. OAC bar share nothing but open an account. Open an account. Open an account. Then general reserve, fund flow and open an account. Profit and loss account, open an account. Then proposed dividend, P&L account, debit side, current year. Previous year is also there information. Current year we need to consider in the schedule of change in fund flow statement. The next one, bills payable. Sorry, before that, proposed dividend is also there. Proposed dividend is profit and loss account, that is open an account. Proposed dividend is there. Profit and P&L account, debit side of current year debit side. Then creditors, current liability, schedule of change. SCWC means is nothing but schedule of changes in working capital. SCWC means schedule of changes in working capital. S means schedule, C means changes, W means working, C means capital. Yeah. Then that is creditors. Bills payable is also current liability, schedule of change in working capital, provision for taxation, fund flow, and open an account. These are all the, because these information, available information, we need to solve the problem with the help of these hints. I had given the hints and answers for this within bracket. That is my hints and that is to solve the problem. That is my hints, and so that is clue to solve the problem, where it appears and where it transfer. Yes, come to the asset side. Goodwill, that is fixed assets. Then open an account. FA means fixed assets, open an account. Building, fixed assets, open an account. Plant, fixed assets, open an account. Debtors, current assets, schedule of change in working capital. Stock, current assets, schedule of change in working capital. Bills payable, bills receivable, Current assets, schedule of change in working capital, cash. Current assets, schedule of change in working capital. Then lastly, bank current assets, schedule of change in working capital. Two effects. All the that is transaction, that is two effects. Additional information is also there. Depreciation, that is plant and machinery account, and P&L account. Twofold effects here also. Then interim dividend of rupees 20,000 has been paid in 2013, P&L account and application of funds. Then income tax of rupees 35,000 was paid during the year 2013. These also, that is provision for taxation, add that provision for taxation, and application of funds, we need to consider that income. Yes, yes, these about the hints for to solve the problems. Yes, shall we move on to the solution for this problem? Here, schedule of change in working capital, that is the first step. We need to follow that. Yes, pro forma. This pro forma schedule of change in working capital for pro forma available in our study material. You go through that. Here, particulars, absolute figures, 2012, 2013. Then effect on working capital, increase or decrease. The pro forma available in our website study material. You go through that. Without understanding the pro forma, it is very difficult to solve the problem. Yes, here current assets. Here current assets, then under that current assets, what are the current assets that is available? Because I already mentioned in that clue I had given and mentioned in that problem, that is where it appears here, that is current assets. See here, yeah, debtors. Current assets are debtors. That is, what is the amount of debtor? 1,60,000. Yeah, yeah, due to that is technical issue, that is internet issue. Yeah, problems on fund flow statement. Here, all the that is transaction, that is two effects. It may be either it may be liabilities or either it may be balance sheet. Two effects. Either it may be schedule of change in working capital or open an account or fund flow statement or appropriation account. That is twofold effects. In that context, we schedule of change. Yes, we are in schedule of change in working capital. That is yes, total, that is debtors 1,60,000 2012. See here debtors 1,60,000. Yes, here debtors is 2012, because here in the fund flow statement two periods, that is 2012 periods and 2013 periods we are considering. Here debtors is 2012 1,60,000, 2013 2 lakhs. Here 1,60,000 plus 2 lakh. In 2012 1,60,000, 2013 2 lakhs. That what happened here? 1,60,000 to 2 lakhs. That is increases. Increase the effect of working capital, increase or decrease. Here working cap, that is debtors is increases for 40,000. Then stock, see that stock is also in the 2012 77,000. Then 2013 1 lakh 9,000. 77, that is 7,000, but 1 lakh 9,000, that is also increases in the tune of 32,000. Then bills receivable is 20,000 in the previous year. Current year, that is 30,000. That is also increases 20,000, 10,000. The difference is 20, 30, 10,000. Then cash in hand. See here, cash in hand 15,000 in the previous year 2012. The current year is 10,000. That is decreases. Therefore, here decrease in the decrease column 5,000. Then, in case of bank is concerned, that is cash at bank. That is previous year 2012 10,000, current year 13,000, 2013 13,000. Here that is 10,000, 8,000. Here is also decreases. 2012 10,000, 2013 8,000, decreases. See here in this decrease column, that is also 2,000. Then total of this total current absolute figures of 2012, total is 2,82,000. Then 13 3,57,000 of current assets, data, stock, bills receivable, cash in and cash at bank. Total of current assets. Then uh, yes. Then next we need to consider the liabilities, current liabilities. What are the current liabilities are there? Only creditors, CL, creditors in our balance sheet. See, that is previous year 55,000, the second year, current year is 83,000. That is here 55,000, 83,000. What happened here? Liability. This is liability. This is not an asset. Liability in 2012, the liability is 55,000. But in 2013, that is increases. Liability increases 83,000. Here decreases. Creditors 55, 55,000 in the 2012, 55,000 previous year. The current year is 83,000. Therefore, here that liability then decreases. Current liability decreases here. Liability decreases. Then Liability in the sense organization has to pay the outsiders, creditors, creditors. The others are paid to the organization because here decreases. Then bills payable 20,000 in 2012 and 16,000 in 2013. That is a liability bills payable liability here increases 60 vice versa. This if you compare to that asset current assets and current liability, that is also always vice versa. Here 20,000 previous year, the current year is 16,000, that is decreases in the increases in the tune of that is 4,000. Then total of current liability 55 plus 20 75,000, 83 plus 16 99,000. Then current assets minus current liability. Here current assets minus current liability. Working capital is equal to total current assets, TCA, total current assets minus total current liability. That is 2,82,000 total current assets minus 75,000 is equal to 2,07,000. Then total current assets of 2013 3,57,000 minus 99,000, that is 2,58,000. Then what is the difference? 2,07,000 minus 2,58,000. Then here the difference is 51,000. That is 2012 51,000. That is the difference. Then total of this 2 lakh 58, 2 lakh 58. The difference is 51,000. Then total increase total is 86,000. Then decrease total is 86,000. This should be always increase and decrease should be equal. That should be equal. 86,000, 86,000. The difference is 2012. That is absolute figure 2012 51,000. That is working capital is equal to that is increase in working capital. Here increase in working capital, because if it shows in 2013 decrease in working capital, this is increase in working capital. Then open an account of C here. Here open an account, because current liability we are considered, current assets are considered here. Therefore this is over, debtors is over, current assets and current stock is over, bills receivable over, cash over, bank over. Then in case of liabilities is concerned, that is creditors over, bills payable over. Then others are here we need to open an account. Yes, equity share capital, that is in left hand side. Therefore by balance carried down 3 lakhs, by bank then balance carried down, that is brought down, carried down, that is balance brought down 4,000 4 lakhs. Where that 4 lakhs? See here 2012 equity share capital is 3 lakh, 2013 that is increased to 4 lakhs. Yeah, that is here opening balance of the equity share capital, that is by balance carried down 3 lakh, the two balance carried down brought down, that is 4 lakhs, that is different total is 4 lakhs, the difference is 1 lakh, that is we called by bank. In bank we need to consider 1 lakh. Then 8%, then 8% redeemable preference shares. See the balance sheet here, preference share capital 8% preference share capital 2012 1,50,000, 2013 1 lakh. 8% redeemable preference share capital, that is by balance brought down 1,50,000. Preference share then balance carried down, that is 1 lakh. The difference is 50,000, that is 1,50,000, 1,50,000. This is balancing preference shareholders account 50,000. General reserve by balance brought down, balance brought down 40,000. See in the general reserve, Balance brought down 40,000. Balance carried down 70,000. Then difference is 70,000. Difference is 70,000. Then provision for taxation, that is also by balance brought down 40,000. Balance carried down 50,000. The difference is 35,000. Total is 85,000. P&L account balance is also provision for taxation account. That P&L account balancing figure 45,000. Then balance brought down 40,000. The total is 85,000. Here balance carried down is 50,000. Then balance income tax paid, that is also we need to consider in provision for taxation 35,000. Then goodwill by that is balance brought down. Goodwill is that is in asset, therefore that is in two balance brought down 1,15,000. Vice versa, 1,15,000. Then by P&L account is 25,000. By balance carried down is 90,000. Total no other items 1,15,000. That is also in debit side as of that is goodwill is also that is 1,15,000. Balance carried brought down. Then land and building, this is also balance brought down. 2 lakhs. Depreciation is there 20,000. Bank, that is sources 10,000. Then balance carried down 1,70,000. That is total is 2 lakhs. Then here plant account. Plant account, that is also two balance brought down 80,000. Depreciation is there, balance carried down, that is 2,10,000. The balancing figure is that is bank account purchase, that is application. We call it as an application, purchase of plant. Yes, P&L profit and loss appropriation account. Fund these fund from operation. With to find out the fund from operation, we need to prepare an profit and loss appropriation account. Here to general reserve 30,000, provision for taxation 45,000, proposed dividend that is current year, previous current year, that is also we need to consider here 50,000. Then goodwill return of 25,000. That is see the adjustments, depreciation adjustment, see the adjustment, depreciation on plant, depreciation of building, interim dividend paying 20,000. Then come to the credit side, that is by balance brought down 30,000. Then balance carried down is 48,000. The difference is that is 1,18,000. That is the difference, because this is we call it as a fund from operation. Fund from operation. If it is debit is more, therefore that is fund from operation. If it is credit is more, fund loss from operation, left hand side. Then last fourth step, this is the third step, profit and loss appropriation account. This is the last step, fund statement of fund flow statement. That is sources. What are all the sources? You see that is bank account and others. Equity share capital account. See the accounts, you can find that. See here, bank 1 lakh, that is in equity share capital 1 lakh. Then sale of land and building 10,000. See here, bank sources 10,000, land and building. Then no other item sources comes into the organization, fund from organization. Then application, what are the fund goes out from the organization, this is fund comes in the organization. Then fund flow from operations, fund flow from operations, that is this is appropriation account, that is 2,18,000, 2,18,000. Then 8% remove preference shares. See the accounts. Redeemable 50,000, preference share holders 50,000. Then purchase of plant, see the account, plant account, plant, where is the plant account? Here, bank balance, bank balancing figure 1,30,000, that is plant, purchase of plant. Income tax paid, where is that income tax paid? Adjustment, see that adjustment, income tax paid Income tax paid rupees 35,000. Income tax paid 35,000. Interim dividend paid 20,000. Then proposed dividend paid probably previous year. Previous year 42,000. Then increase in working capital 51,000. That is fund from operation this side. It is 2,18,000. This about the four steps. First one is that is schedule of change in working capital. First step, we need to prepare a schedule of change in working capital. Their working capital, current assets, current liability, then find the difference. Then second one is open an account of all the fixed assets and current assets. Fixed assets and fixed liabilities. Current assets we considered there. Then appropriation account to find out the fund that is flow from that organization, operations fund from operations. And lastly, statement of schedule of that is fund from operation, statement of fund from operation. Here, what are the sources comes into the organization, what are all the that is application goes out from the organization that we considered in this fund flow statement. Okay, tomorrow I will continue that, or shall I finished cash flow statement, or tomorrow will I engage? Will I continue another 10 minutes, 5-10 minutes? Continue, or tomorrow will I start tomorrow, or today will I continue? Anyone message? Yeah, okay. Tomorrow I will continue because no one has message. Tomorrow I will continue.